Good afternoon, everyone. Hey guys, this is Bruce Marshall for Simpler Trading doing the nightly market update for Wednesday, August the 2nd. So, welcome, happy Wednesday. Glad you're here. Kind of a crazy day in the market today. I've got the ES here on the screen. We're going to talk about that. We had a pretty good sell off today overall in the market. The Dow was down about 350. The SPX was down about 64. The Nasdaq was down about 340. So and the RUT was down about 25. So everything is down a pretty good bit, which is very unusual considering what we've been, in the last several months. It's just been up, 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 and then if we get a pullback, it's a tiny little pullback, and then we keep going. This was fair. I mean, it's not anything major, and we'll talk about some levels here in a second. I was hoping that this red line here, our Voodoo Fire line, would hold, and we unfortunately broke through a little bit. We didn't close below it. We bounced back up above it. That's a good sign. But unfortunately, we won't know really, what things are going to look like until tomorrow. But if you didn't see this and don't know what caused this, you see this big gap down right there. That was the U.S. credit rating was downgraded by Fitch last night. Fortunately, it was after the market closed. So downgrade on the credit quality of the United States because of the debt levels that we have and the deteriorating credit quality going forward that we have right now. So not a good sign, right? And if at this point, if Moody's comes out and S&P comes out and downgrades this, says, what, Fitch is right, we're going to downgrade, this is going to open up a big hole on the downside. I don't think that's likely, but that's definitely possible. But with this sell-off here, we've got the 10-year and the 30-year Treasury bonds are at the highest level since almost a year ago, which again is not, if you have super high Treasury levels, people will take money out of the market to put into bonds where it's a safe haven, that type thing. Again, is this something that's worrying us yet? No, not yet. Let me show you what I'm looking at here. So if we go, I'm going to flip this over to my Darvas box and grab candles here and show you. Now this is on the ES, and if you notice, here I'll zoom in a little bit more for us. If you notice that every time, there's the current price, we got up to 40, again this is ES, we got up to 46.34. Every time we get extended on the upper end, we come back down into this is a 34 EMA, come back down into it, come back down, and we're right there. That's totally normal. Even here, we're not that extended, but we come back down 34 EMA and bounce. Right here, we get above it, come back down and bounce, come back down. And we went to the lower 34 here, we still bounce, lower 34 there, bounce, lower 34 there, bounce. So this pattern is very predictable and common, I guess is the best way to put it. So at this point, that's not really alarming at all. Now let me back that out a little bit. This is a 1-year chart, and actually let me go to I'll go to a 2-year chart here, and you can see what we've done over the past 2 years. Again, same thing. Every time we get extended here, we come back down into the mean. Not a big deal. Sometimes if the news is bad or whatever, if we break through the other side, yes, we could do this. And that's what we were doing all last year. Now this is kind of under a different scenario with CPI, inflation data coming in hot and the Fed raising rates and all that kind of stuff. We're on the tail end of that. That's what caused a lot of pressure here, which we're getting relief here because we know we're getting closer and closer to the end of that rate hike cycle. So again, at this point, not looking too bad. This is the ES. Let's look at the NASDAQ here. Kind of the same thing. We pull right back there into the mean. There's nothing out of the ordinary. In fact, it's healthy for us to pull back. The market can't keep going in one direction forever. So when we pull back, it is healthy for the market to do that and kind of regroup to make it, make the next run higher. Again, all this is going to depend on what happens with other data being, we've got Amazon and Apple reporting tomorrow after the close. We've got payrolls on Friday. We've got CPI next Thursday, PPI next Friday. So a lot of big data points coming out. We don't have a Fed meeting in August. We do in September. So is this going to give us much more downside? And right now it does not look like that. But again, we have a lot of things coming up in the next couple of weeks. Let's look at the RUT here. The Russell, again, we're just coming back down a normal pullback here. There's nothing, nothing crazy about that. So I'm not reading too much into this yet at this point. We'll know tomorrow. Let me go to a smaller time frame here. Again, let me put this back on, say, let's do our standard. Actually, let me do this. If we look at this on a, well, I'm trying to get a indicator here that'll give us a look. So this is a 20-day chart on the ES here. I had some levels here. We actually took those out this morning. This is not a terrible place to be. We need this to hold, and again, we should know tomorrow or Friday, if this is going to continue the downside or not. If we get a good healthy bounce tomorrow, that's great. And I don't know. There's no way to tell if we're going to do that or not, but we shall see. As far as individual names, again, if we look at some of the big name stocks, of course, we got Apple and Amazon coming up, Google, Netflix, Tesla, that kind of stuff. Nvidia, especially, all these stocks needed a decent pullback to really take a breather. Let me put my grab candles back up here. And again, very normal pullback here. You'd gotten kind of extended here, right? Good earnings and all that kind of stuff. This is Nvidia. They all look very similar. So I'm not buying anything really yet. I will get more excited here if we see some stabilization over the next couple of days or so in the market. Now, a lot's going to depend on what happens with earnings from Apple and Amazon. If they crush it and guide higher, that's going to give a lot of strength to the NASDAQ and the overall market. Of course, if they both miss and guide lower, then that's a whole nother story. So we shall see. But stay on your toes, for the next at least couple of days. I'd say at least a couple of weeks, because we got a lot more earnings coming in. We've got CPI and PPI next week, and payrolls on Friday. So a lot of things can happen. So just be on guard and keep some powder dry just in case. And if this does break lower, then we'll start looking at support levels below this and see how far we might go. But for now, everything still looks relatively calm. So that is what I've got for us right now. We'll know more tomorrow how we trade during the day tomorrow, and then after the close tomorrow, Amazon and Apple. So tomorrow, Friday are going to be key days. Payrolls before the open on Friday. So we'll see what happens as we go into the weekend. So thanks for the time. I appreciate it. We'll see what happens, and I will talk to you guys at the next update. Thanks.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me